Happy Friday, Eric Bible with the Bible team at Neil Home Loans. And if you're like me, this week felt like 3 weeks lumped into one, and super happy that it's Friday. Also, super happy that mortgage rates are yet again below 7%, 6.98 to be exact. And you may be saying, well, Eric, that's a marginal decline from last week. So why are you celebrating? Well, at one point midweek, we saw rates approaching 7.3%. So the fact that we saw a swing down and a sharp swing down towards the end of the week, that's the area to celebrate. Now, a lot took place this week. I want to cover on as much as possible, but keep it as condensed as possible. From the election, Fed rate cut, to more employment data, a lot happened, and in turn, a lot correlated within the markets. And really, our clients, and I know your clients, are asking, well, what does this all mean, and what can we expect going forward? So first things first, the election. By surprise and caught a lot of individuals off guard was the results of the election. And there, Tuesday evening and into Wednesday morning, we saw the markets respond accordingly, which in turn is where we saw those rates really climb up. And the fear and concern was around unilateral control of the government, specifically through the Republican stronghold. And typically that is inflationary. And as we know, inflation is not revered very well with mortgage-backed securities. So it was no surprise that we saw rates really deteriorate late Tuesday into Wednesday. Now that was really kind of settled and stabilized when we saw some of the most recent employment data, specifically around continued claims that were released on Thursday yesterday, leading into the Fed decision. And a lot of individuals yesterday said, well, hey, the Fed cut, so we saw, the big rally and rates respond accordingly. And the answer was no. Yesterday, we saw rates rally, meaning, break below that 7% threshold, even before the outcome of the most recent Fed cut in the Fed press release. So, as I've said multiple times throughout, and as you hopefully know at this point, the Fed does not control mortgage rates. Now, there is a correlation, but yesterday's movement, and ultimately the movement we're seeing here today, is centered around the concern that the employment sector is ultimately deteriorating. So, what does that all mean? And how did that influence potentially the press conference from Jerome Powell yesterday? So, jump into that. Yes, the Fed cut for the second time in this cycle yesterday, 0.25%. Market was expecting that. No surprise on that front. What did stand out were a couple things. One, media there asked that Jerome Powell specifically, President-elect Trump, has been very vocal for his not liking his handling, Jerome Powell's handling of recent of the monetary policy. And they specifically asked, if President-elect Trump were to ask you to resign or forcefully ask you to resign, what would you do? Jerome Powell said no. The media loved it. Bonds also loved it. Additionally, the Fed is very pleased with the progress made on inflation. Additionally, they are very closely monitoring the labor market. As we saw this morning, or yesterday morning, I should say, the release of continuing claims, we're seeing an increase in job deterioration, which definitely has the Fed in focus. And he was very quick and direct to say the Fed's responsibility is ensuring maximum employment and price stability. And if we see or get signs of employment deterioration, we will take action. Also, the deck is set for December's additional rate cut, so the full point this year. As expected, when asked what we expect in 2025, he said data dependent. So yesterday, where the market was expecting some very strong tonality from Jerome Powell, was actually rather reserved, which in turn edified really that price improvement we saw yesterday. So we'll continue to monitor this throughout and continue to share information as it comes in. But really the focus here is that markets hopefully are turning into a less volatile space and really focused on moving forward. Now, As we know, the results of Tuesday's election has a lot of individuals left scratching their heads and wondering why. And what I want to say, this is in no way, shape, or form, hey, you made the wrong decision, the right decision. This is a message of unity. At the end of the day, we're all Americans. And we're all in it with the same focus in mind, to be good people. So with that, let's embrace one another and focus on instilling good in the community. As always, if you are running into challenges with communicating any of this to your clients, know that we're here and would love the opportunity to support you. As always, let's make it a great Friday and an even greater weekend.